investment data analytics firm. We are fortunate enough to be working with Ingo and his team at Refinitiv and a very small group of global organizations, including Thomson Reuters Foundation, the International Finance Sustainability Center, and many others around this discussion, around this topic of data disclosure, and we'll be coming out with a paper in the next couple of months with some of our perspectives on this and looking at the S and indicators in the S. And so this conversation is very pertinent to our work, and we're delighted to kick off our year with this. And so without further ado, I will turn things over to Ingo, but I just wanted to make a couple of housekeeping items for you all who are on the call with us. This webinar will be recorded, so you will be able to view the discussion post the conversation this morning. We have muted everyone for the webinar except for the speakers. Once we get into Q&A around about 11:45 Eastern Time, we'll unmute you all. We ask that you submit your questions through the Q&A feature in the bottom bar of the Zoom platform. So please submit your questions there at that time. We can't promise that we'll get to all of them, but we'll certainly funnel up a number of them to our speakers. Similarly, if you have any technical difficulties, please submit those through the chat. The Compass team is monitoring the chat and will be able to respond to any questions that you have. Lastly, I just want to say that we have a robust calendar of activities happening this year, particularly across our virtual events. And I want to just put a plug for everyone to look out for an invitation that will be coming out in the next day to our March Investor Summit for March 16, 17, and 18. So please be on the lookout for that. And so without further ado, I would love to turn things over to Ingo, who will welcome our panelists and kick us off in the conversation. So over to you, Ingo.
Thank you so much, Sensia. It's a pleasure to be with you this morning. So good morning, everyone. Good morning to the panelists, and good morning to the individuals who joined our conversation this morning. My name is Ingo Steinhauser. I work for Refinitiv. I'm going to be moderating the session this morning. And I think it's suitable that Robert Kennedy Human Rights is hosting an event with the title, The Transparency Gap, where data disclosures fall short. Data disclosures and more broadly, the collection of data sets is important in the provision of transparency to investors and stakeholders and shareholders around environment, social, and governance risk factors. So I want to give a very special thank you to the Robert Kennedy Human Rights for thinking about this important subject. For our discussion this morning, let me briefly introduce you to the panel. We have Shini Duan. Shini is the CTO for Liberty Shared, and she's a social scientist by training. She designed Liberty Shared's victim case management system in 2013 for frontline anti-trafficking NGOs to manage their case information. She's also responsible for data research at Liberty Shared on the intersection of forced labor and financial markets. And prior to joining Liberty Shared, she was a graduate student researching systematic risk and fragility. So welcome to the panel, Shini. Then we have Stuart Kay. Stuart is a co-founder and portfolio manager of Madarin Capital with primary responsibility for model development, portfolio construction, and management of the firm's suite of equity products. He brings 30 years of asset management experience to Madarin, including 14 years at Invesco, where he served as the US Director of Research for Quantitative Strategies. Welcome, Stuart. Then Kyle Seeley. He's the Corporate Governance and ESG Investment Officer at the New York State Common Retirement Fund, the third largest pension fund in the US. He's an integral part of the fund's internationally recognized environment, social, and governance integration efforts, and work to promote good governance practices that led to sustainable economic growth and reliable investment returns for the fund's beneficiary. So welcome, Kyle, to the conversation. Now, let me frame the first question and provide you with a couple of data points. The trend of ESG investing has been gaining momentum for years as climate change and other social ills threaten to alter our way of life. We are also seeing, as a result of COVID-19, an acceleration of funds moving into ESG funds. For example, flows into European ESG funds have reached an all-time high of a record 882 billion. And just in the last year, the number of new sustainable offerings is well over 300. The focus has always been a bit more on climate-related disclosures and data, well represented in the E category of ESG. But since COVID, we are seeing a more emphasis being placed on the social category. And we're going to talk about the social category today. So I want to talk a little bit about what is part of the social category for the audience and really frame this conversation around the data points that we are looking at when we are making investment decisions. So my first question goes to Stuart and to Kyle around the data points that they will be looking at or they're looking at when they are making investment decisions.
Sure, I can start. In terms of data, that's part of why we're here today, is that we would prefer to see more data offered, especially across different social indicators. We in our strategies at Materan, I mean, there are various data items we use across ESG, looking at governance factors in specific, where it's much easier to get that data from proxies, for example, and environmental factors. Again, it's also becoming easier to get that data, as you mentioned, Ingo. There's been a great deal of increased disclosure. Social factors, much less. And so when you're talking about social factors, you know, we think about things that involve civic engagement, like amounts of money donated to charities would be an item, for example, that where we would like to have, you know, better, more complete data sources. Educational attainment. Think of companies reimbursing employees for college, grad school, or other professional programs. We don't really see, you know, that data around retirement programs. More data on, you know, 401k matches, you know, consistently disclosed across companies would be helpful. You know, gender data or race data. So looking at compensation within level, male versus female, or Black versus white versus Hispanic versus Asian, you know, those kind of data items would be, you know, helpful to have to then be able to evaluate companies and what they're doing in the S category. So I don't know, Kyle, if you want to give more input on that.
Yeah, I'll jump in. You know, first I would like to thank RFK for the opportunity to take part in today's event and everything you do to build on the legacy of Robert Kennedy and his fights for human rights and social justice. So thank you for your work, and thank you for allowing me to be part of this event. Here at the fund, we have long integrated ESG factors into our investment process because they both can influence risk and returns. And we've been doing this for over a decade now at the leadership of Controller Thomas DiNapoli, who is our trustee of our fund. And really, when we look at the S category, we have, most of our, over half of our portfolio is in public equities. Overwhelming majority is passively invested through index strategies. And so we actively use ESG data, and particularly S data, to engage our companies on improving their long-term value and to help address risks. And specifically on the S, we look at the issues of diversity, equity, and inclusion, and human capital management practices. And the more data that we have along those lines really will help us in the long term better engage with our portfolio companies, make more and better informed proxy voting decisions. Many investors, including us right now, are voting our proxies in accordance with how companies are addressing ESG issues, and also the possibility down the line of public pension funds and other investors really incorporating S issues into investment strategies like passively indexed strategies that we use. We've done this on the environmental side here at the fund. At the leadership of our controller, he pushed us to incorporate a passively indexed fund that measures and weights companies based on carbon emissions reductions. That's leadership, and we would love to do the same on the social side at some point. But we need that standardized data that is comparable across all sectors and industries and company by company, so that we can make better informed investment decisions.
Would you say that after COVID-19, your focus has shifted in terms of looking at ESG data from a more, and you mentioned carbon emissions in the beginning, from a more environmental focus to a social focus, by looking, for example, at how organizations are dealing with remote, let's say, work, or how they're dealing with any kind of human rights or other workforce-related issues? Is this something that you are now, because of COVID-19, is this triggered that, or is it more that this was something that was within your framework of investment criteria usage anyway?
Yeah, our trustee controller DiNapoli has long pushed us to focus on the S issue because of the impact it has on long-term returns on portfolio companies. So this has been a long-term priority for us. But I think the COVID pandemic, as well as the murder of George Floyd, have really accelerated the trends that have long been developing over the last decade. And at the fund, I say that acceleration. It really is COVID and fight for social justice has accelerated all these trends even further, so that now it's at the top of the corporate agenda for the portfolio companies that we engage with, where we're focusing more time on how are you addressing inequalities within your organization. How are you incorporating diversity? How are you having diverse boards that represent your employees and the communities in which you operate? And how are you really looking at those core social issues that are now extremely, even more material to your companies? And I just want to point out one thing. Over the summer, S&P pointed out that racial injustice is becoming a more material issue. And for companies to not look at this issue, disclose on it, how they're addressing it, as well as providing, as I said, standardized disclosure on what's the makeup of their workforce, and what types of programs they have in place for recruiting and retaining and promoting people of color. To not be doing that these days is a risk, and it's been shot up to the top of the agenda for us as engaging on these issues, and it will continue into the future because these issues aren't going away.
Do you agree with that statement, Stuart? Would you agree that after COVID-19, there's a renewed or a stronger interest in S categories in the investment decision process?
Yeah. I think it's actually the combination of COVID-19 and the George Floyd incident. I mean, realistically, that showed a light on a lot of what was going on out there. Companies have moved to even change where they bank. Like I personally have moved to change where I bank. Right there are Black-owned and minority-owned banks out there, which are fine banks, don't have a lot of capital, but they're the ones that lend to their communities. And so by more people and more corporations banking with some of those banks, you get more money into those communities, as opposed to some of the larger banks who have different lending standards, sort of without naming names. And I do think that was clearly pushed forward by what happened, during 2020.
Interesting. Now, give me a couple of examples where you think that gaps exist in collecting social data.
Yeah, sure. I mean, the one where, to me, where I know some companies have started doing this, some companies have started disclosing. I know Salesforce.com was one of them, where they looked level by level within the company and said, how much are we paying women at this level versus how much are we paying men at this level? So you're talking same company, same level, basically same job, is there pay equality or not? I think they found out on average they were paying men a little more than women. It wasn't a lot. But again, disclosure on things like that, or making that disclosure public, I think will be helpful to shine a light on where there maybe are some inequalities, and companies should be addressing them, in one form or fashion. So that would be one spot I would talk about. Another spot, just in terms of, in terms of things that should be easy for companies to disclose, is like healthcare benefits, which are, huge cost to companies now, and they definitely keep track of it. And it would be easy to disclose, what percent of the healthcare benefits they are paying for their employees, as opposed to what percent is being put on, the backs of employees. And I think that will differ, greatly across companies and, their policies. So.
Yeah. Company disclosures are obviously, I think, the main source of information that investors are looking at. What are companies doing around the certain subcategories that you will see in ESG? So for example, we at Refinitiv, we're looking at the S category in the following way. We actually break it down into 4 subcategories, and we're looking at workforce, product responsibility, human rights, and community factors. I think we track over 140 social data points in these 4 subcategories. So the challenge is obviously collecting information that companies are disclosing, but that's not the only source of information. I think we have to be, more broader in the way how we collect information. And we are doing that by looking at independent media sources that basically reveal or publish controversies around certain, let's say, activities and organizations to really, give a neutral light if a certain policy is really lived in and really implemented in an organization. So I want to talk about the importance of independent media sources. And Kyle and Stuart, if you could give us, a brief statement. Are you looking at independent media as an evaluation criteria, or is it mainly that you're looking at company disclosures?
I think, from how we look at media sources and controversies, is we incorporate, when we review our portfolio companies, controversy data that is collected by some of our service providers that does point out when there are concerns in whether it be media stories, NGO reports, and other public information that could be out there. And we do use that when we engage with companies, and we specifically point out, all right, this has been said, this is in the news, seems contrary to some of the policies that you have in place, or it seems that your policies may be lacking in this spot. Tell us more about this. What is going on? So we do use those sources, and it's very important for us to have that information. And it just along the same lines as it's important very much to have standardized disclosure on S issues from all our companies, so that everyone's reporting on the same exact standardization and data. Having that monitoring of controversies and stories that are out there and work by NGOs is important too.
And that is in our view, I think, an important element by really closing the transparency gap by looking at other data sources, including independent media sources. So I want to bring Shini into the conversation. She is CTO of Liberty Share. They're doing very, very interesting data analytics and data collection work around the social category. So Shini, if you if you could explain a little bit what you're doing at Liberty Shared, how you're collecting data, and then we can look at a live example where actually the data that you have collected led to a different assessment of risk around a social company in one organization that you actually evaluated.
Sure. Yeah. Thank you for having me here. And as Ingo already introduced us, we are a nonprofit, so our perspective is a little bit different. We're not investment nonprofit either. So what we really do is we work on behalf of vulnerable workers. So really our constituents we're thinking about are workers on the ground that possibly are located in countries where they don't really see any of the benefits from the corporate sector. And essentially they're possibly migrants, possibly stateless people and so forth. Our work really came out of Southeast Asia, and now most of our projects are global. So to Ingo's point, we have been looking at independent media for a long time in regards to how they report on trafficking and forced labor issues. And to be very frank, most of you will know the media industry is taking a huge hit in the last few decades. So there's fewer and fewer investigative journalists that are willing to go on the ground because the budget is not there. But for those who do, they can write really important pieces of shedding light onto what's happening. But the other bit that we also look at is the really functional part of media. So they'll report on things that are like court proceedings. You know, these are what we think of as court beat reporters that are happening all over the world. So I guess Refinitiv has this strange history, and before, when it was part of Thomson Reuters, most of you will know its World Check program. And it basically is a list of, quote, bad guys who've been in the criminal justice system all over the globe that is getting screened. So we actually were submitting information about traffickers who've been convicted or charged in different jurisdictions based on what our partners are hearing on the ground. Because a lot of times it's a very small local paper that's writing about this. And that doesn't get pushed into the system, so to speak, the one that we live in and have a lot of privileges in at all. So that's one aspect. The other aspect, and I'm going to share my screen now, is on the side of more proactive work against exploitation of workers and for the promotion of rights of the vulnerable. Something we've been looking at is not just on the risk control side, but it's also on the investment side. So being more proactive. And this is just an example. I don't want you to think that, you know, going issuer by issuer is the way to approach it necessarily. But most recently in 2020, we submitted a petition to the Customs and Border Patrol in the US. So they are a regulatory agency where they control the flow of goods and people into the US. And they actually have a lot of powers, administrative law powers, which is great in many ways and maybe not great in other ways, to stop goods from coming into the country. And one of the laws on the book says that they are allowed to stop goods coming into the country if they have reasonable suspicion that it's made with forced labor. And this has been on the books over a decade now, that law, but it's just not been triggered very much because there hasn't been really much focus on it and they haven't had cases to investigate. So there's been a few cases now on these issues, but April last year, we submitted a petition to them saying that Sandarbi Plantations, which is one of the largest palm oil producer, if not the largest palm oil producer on the planet, based in Malaysia, is making its palm oil with forced labor. There are numerous previous documentations by media, by other nonprofits, and we did our own on-the-ground investigation, finding that there are still labor rights abuses on the ground on their plantations. And a lot of the things about gender and healthcare, all the things that have been brought up by Kyle Stewart, they're all applicable, but just on a much grander level when we're talking about potentially undocumented migrants picking palm fruits, right? We have women who are helping their husbands pick the palm fruits off the ground. They're not getting paid. They're not even part of the workforce, so to speak. They're kind of a shadow workforce. So there's all these issues going on that are even beyond the sort of direct labor rights abuses. But then when we looked at how Sandarbi is seeing through the lens of ESG, what was interesting to us is they're considered one of the leading ESG issuers in terms of their pristine disclosures. And if you read their annual report, they are extremely well written. And I do think there's some kind of underlying correlation about how well companies are rated on ESG and just how much resources they have, because essentially they've been paying people like other nonprofits and consultants to help them craft extremely good disclosures. But the thing that concerned us was the gap, as we're talking about the gap of transparency between what they say they're going to do, their policies, and what actually happens on the ground. So once we filed a petition, and actually in December 31st, 2020, CBP actually found in favor of the petition. So right now, goods from Sime Darby that is palm oil is not allowed into the country. That's technically what the WRO means, and we'll just have to see the fallout from that. So it's very early days for us. But as you can see, they had an A+. They have pretty much great grades across their pillar scores. This is the icon for those of you who might not know it. If you have Bloomberg and so forth, some of these screens will be similar, where you go into ESG and you can see the pillar scores are essentially where they're rated based on the company's disclosure. And where third-party information can really come in is under Icon's schema is under the controversy score. So the year prior, they had an A+ controversy score. And then you can see it dropped to a D+, which pulled down their overall grades to a C+. And if you look at what the controversies are, they are essentially the same piece of information that we managed to circulate into the financial data system, and which is them saying to, in their news release, they're asking for more information about our petition because there is concerns of human rights infringement. And this is the piece of information that got picked up.
So Kyle and Stuart, you're looking at this, you're looking at ESG. Let's say you would be looking at a statement like that. You were looking at a company like Sime Darby, and you're thinking about maybe enhancing your emerging markets exposure, specifically looking at Malaysia, for example. If you would see data like this, how would that influence your investment decision? It certainly would, right?
I guess let me address it first, sort of more broadly as opposed to this specific company. So there's we have done testing on different controversy scores and incident scores, you know, where the data has come through the media, right? And so one of the things which is factually correct from our testing, if you look at subsequent returns over the next, 1 to 3 years, the companies that show up the worst on those scores tend to underperform. So it's a factor in terms of subsequent returns, but it's also, it tends to be highly correlated with size, so that one of the sort of problems with the data and when dealing with it is you just have to realize that it's much more likely for the mega cap stocks to be very negatively rated on those controversy and incident scores than it is for a smaller cap company where there's less sort of media and less news flow. So just to be aware of that. So I just wanted to make that point. Anyway, Kyle, you should give your input.
Yeah, I think if we saw certain data like this, it would lead to an engagement, and it would lead to a conversation with the company about, as I mentioned before, explain to us your point of view of this information. Explain to us what policies and practices you have in place. Is there anything in the future that's going to enhance or provide even more robust managing of these risks? Is there a time frame you can give us? And all that goes into, as I said, a larger engagement. Yeah. Either that's putting a company on, we want you to get here. Here's our time frame for how you get there, and then that may trigger us to consider next steps. But we would actively engage a company using this information and trying to push for reforms and changes to try to strengthen the long-term value of that company.
I think there's one thing, and Stuart, you mentioned that when you're looking at large companies, typically you would see there is a lot of disclosure happening. These companies have large ESG teams, they're collecting data, they are active in the market. Take an organization like Nike, for example, very, very large organization, active all around the world, obviously you will find more controversy stories about them than you would find about, let's say, a surfwear manufacturer out of Australia, right? So the way how we look at that to really reduce the bias is by really discounting controversy stories for the overall ESG score that we actually calculate by looking at controversy and media data. So for a company like Nike, a controversial story will be less impactful in the overall score than it would be, let's say, for a company called Rip Curl, which is an Australian, let's say, surfer company. And I'm mentioning Rip Curl because Rip Curl had was in the news years ago for actually outsourcing. They actually manufactured their work in China, but China then outsourced some of the work to North Korea, and they were manufacturing their surf wear products in North Korea. When the news came out, the impact, obviously, for a small organization like Rip Curl was obviously much, much greater. So I think you're right in that point. We really have to look at the size of an organization and then, look what it does to controversy stories that will be happening. And I think on that case here, Shini, what you shared, the challenge really is by looking at ESG data from emerging markets, there is less transparency around the collection of it. We know US companies are regulated. There is a much, much stronger emphasis on workforce-related issues, on product responsibility, or any kind of community engagement for these organizations. I would say Western companies take ESG seriously. They take the responsibility seriously. And when you have less, let's say, oversight in countries like Malaysia, for example, there is certainly a much, much higher possibility that these kinds of controversy stories actually will emerge. And I want to ask you, can you talk a little bit about the other work that you are doing at Liberty Shared in terms of really collecting, I want to call it bottom-up data from victims that have been victims of human rights abuses? Can you talk a little bit about the work that you do in that area?
Sure, absolutely. And just before I get to that, I wanted to address the point about the emerging markets and certainly maybe Asian countries not having a strong regulatory framework. So to their credit, actually, we filed, and I think the larger question here, especially for those who are in the investment world, is does ESG actually, if I pay attention to it, besides the fact that I might morally care about it, give me better returns? And I think the evidence is very murky on that. As Stuart said, there's a lot of collider variables about who does this good disclosure and the size of the company, the resource, and whether it's public facing, all that stuff. So I think that's just difficult to parse out, and we don't even have clear metrics of what ESG is. But the second thing is we're trying to put pressure on, especially the social issue, where if you're caught doing something like using forced labor, there should be substantial liability to your company because you're basically not paying your workers. I mean, it's a pretty fundamental governance issue. It's not just, do you care about Black Lives Matter? Have you put out a statement? I mean, that's important on a value level, absolutely. But we're talking about something fundamental, like you're making stuff and you don't have the right governance to pay people, or you don't even know it. So we actually filed a complaint with the Malaysian stock exchange regulators on Sime Darby because they're listed there. And to their credit, Malaysian stock exchange actually has reporting mechanisms or requirements on ESG to be accurate. And this is, I think, a little bit maybe even above some of the other countries that we might think are more advanced. They might just have guidelines, but you can't make a complaint saying their ESG disclosures aren't accurate, but Malaysia does. So I think I just want to give some credit to some of the regimes out there that we think might be a little bit behind. They're sometimes actually doing some pretty interesting work. That said, I don't know what the outcomes of that complaint will be. Is it going to be a fine? Is it going to be censure? We don't know. This is pretty much new grounds we're treading on. I do want to then quickly go to the work that Ingo alluded to. This is just a really quick map. Hopefully you can see it on your screens. Let me know if you don't see a map, but essentially this is the map of our live case management system. So our case management system is used by nonprofits around the world that we work with to manage their victim case data. So as they have a person who's been in a trafficking situation get services from their organization, they record their case history and then provide them services. In the process of that, we're able to get some information like where was the victim from, and where were they trafficked to? And this is a map of that. So where did they come from, and then where did they go? And you can see the complexity. All I'm trying to show you is the case management system data is very reflexive of the fact that there's complexity in migration these days, right? This is not a one-off occurrence. There's just a lot of exploitation when vulnerable people move around the world and they're seeking jobs, or they're falling into situations where people are just exploiting their vulnerability. So a lot of times, a lot of these routes, we don't actually end up getting information that's actionable in the financial space, because a lot of them are one-off sex trafficking cases and so forth. But sometimes when we work with a partner on the ground and they're saying, yes, we help a lot of sex workers who've been trafficked, maybe they're involuntary sex workers, but then we also hear that there's a factory being set up. Is there something you can do with that information? And there is just so many stories of that, where people were like, well, what can we do about this information? We know people are being exploited on the ground, but who takes that information? So to Kyle's and Stuart's credit, the fact that they're open to hearing information from people on the ground is really important. I mean, I couldn't tell you the number of times we approach the likes of Goldman and those big funds, and they're like, we really don't want your information because we don't want anything that is potentially defamatory, is potentially not sourced in the public sphere, right? We don't want to hear it. Let me just look at my Bloomberg screen, see that they have a good score, and I'm moving on with my day. So I think there's just a bigger conversation about how to get information to people in a way that is not defamation. We don't want to put it out there. We don't want to name and shame, but we do want to have targeted audiences who are willing to receive information and think about their ESG approach holistically, which the speakers on this panel are doing. But I think that's an example to be followed rather than a trend that we see right now. So hopefully that's a good overview.
And I want to ask Kyle and Stuart. I know we are about 20 minutes to the hour, so we want to give the audience obviously something.
Yeah. Hi,
please.
Ingo. Yeah, we have a couple of questions that have popped in. So if once you're done with this last round, we'll try to address them.
So I want to talk about disclosure standards, and that question is for Stuart and for Kyle. Do you think we need more disclosure standards, similar as we have on the environmental side with TCFD, for example? Do you think we need that for the S category, or do you think there is enough interest, I think, and the world is moving into this direction that voluntary disclosure is actually good enough? And with tools and sources we have today, we probably have enough transparency and enough data to actually, close the transparency gap by looking at other sources. Do you think we need mandatory disclosures? What are your views on this?
Yeah, I would be in the camp of, excuse me, yes, on the mandatory disclosures. I think otherwise you have the potential for an issue where companies count things different ways, and and treat data, excuse me, treat data different ways. So I'd be a yes on that. So anyway, Kyle.
Yeah, sorry to more agreeing with Stuart, but yes, we need more standardized disclosure. And the former administration's focus on principles-based disclosure and voluntary disclosure really has led to inconsistencies and incomplete information, which then leads to more, from our issuers, I would say, more ESG disclosure fatigue and survey fatigue. Something that we hear from our companies is, we have hundreds and hundreds of requests for reporting from this organization and that organization. If we really had standardized disclosure on S issues, it would, limit the burden on our portfolio companies, provide us the decision useful information to make investment decisions on these issues. And, I think we've seen the SEC, the Investment Advisory Committee, SEC commissioners weigh in and say that this is an important issue and needs to be taken on by the Securities and Exchange Commission. Hopefully with this new administration, this will be a priority. So I think that's how we push the ball forward, so that we have standardized disclosure, but we also have entities and organizations who are, providing more, further information on the other side, like what Liberty Share is doing to kind of complement that, so that we can use all that information to make better investment decisions.
Yeah. We're working on and I think our colleague Stancia from Robert Kennedy Human Rights mentioned that we're working on a project that we label Strengthening the S or Amplifying the S in ESG, which includes the Thomson Reuters Foundation, includes us at Refinitiv, it includes Robert Kennedy Human Rights, it includes other NGOs, including the UNPRI, are really looking at ways how we can bring more transparency around the S categories, really understanding, for example, the issue of materiality. You know, what is really material in these various, let's say, categories that we have? As I said, we are tracking 140 of these categories. Which of these are really driving the agenda and are really driving change? So that's part of the project that we are working on currently, to really put a bit more light into different implications of various S categories. Let's open the conversation for questions. So if you could help us with the questions, please.
Yes, Ingo. So we have a couple questions that have popped in throughout the conversation. I think there's one that talks about the George Floyd incident and sort of the momentum that we had around that, with a lot of companies, investors really coming out with announcements and statements. And so the question there is, what are the incentives that we collectively need to maintain in order to put pressure on companies to keep this momentum of racial and economic equity front and center, not just as a PR strategy? So, you know, comments on that, because that feeds into the data disclosure. It's a way to hold the industry accountable. So there's one question there. There's a question coming in from CalPERS that at the SEC, they've been working on a disclosure framework for human capital management and expect this to be moved forward under the new leadership. And so what are panelists' thoughts on using that as the sort of unifying regulatory force that the industry could rally around to support human rights reporting process? I think that's a really good question. So would be curious to hear from you all on that. There's one, I think it's in reference to a comment that Stuart might have made, that if the larger the company, the more corrupt, why not build portfolios exclusively on smaller companies that do not register human rights violations? So what do we need to do to push investors to invest more in smaller companies? So tossing that your way, Stuart. And then there's another question that I think also ties to the first one around the announcements of racial and economic statements, if you will, that when we link ESG and racial equity to investment performance or the company performance itself, what are we reducing human equity to an economic output? You know, just some philosophical, some thoughts on that would be good. And I think a couple more are coming in, but I'll stop there and leave it up to you all to tackle them.
I have to address the one point that you made.
Sure, yes.
I just want to clear up. I didn't mean in the data to say the larger the company, the more corrupt they are. What the data shows to me is that there are more news stories and more media stories on larger companies, and so therefore, if you're just looking at those controversy and incident scores, the larger companies will show up as scoring worse on that. You could also have a lot of small companies that are very corrupt or doing bad things, but just the news is less likely to report on them. So I just wanted to make that clear. You know, and so then I think the person's conclusion in your question is, you know, why not invest more in small caps? That's you know, that's a whole separate issue to be dealt with. Anyway, I just wanted to make sure I made that point. I don't know if anyone else has sort of answers to other questions they want to get.
Yeah, I'll jump in on two of them. The first one about how do we keep up the momentum here on these racial injustice and social equity work. I think companies have put out a lot of statements over the last year and have done a lot of different things to respond to the COVID pandemic and to the murder of George Floyd. The incentives, I think, one being the more that we can show that these do have impact on long-term value, that having more, having better human capital management practices that incorporate diversity and inclusion, both race, ethnicity, as well as I mentioned here, because I know our good friend Ted Kennedy's on the phone, with inclusion of people with disabilities, and policies and practice comes to have holding their feet to the fire to say, this is what you said you were going to do, and this is what you care about, but how are you actually putting it into place? How are you actually putting the policies and practices? What do your key performance indicators look like? So how you're measuring these issues. That's, from the investor plus, as well as the activist side, is really holding feet to fire. That's how we can continue up this momentum, as well as, I think, having an administration now in Washington that is focused on these issues, that there can be regulators looking at each one of these topics and having a core priority of it being equity. I think that continues the momentum and continues the work on this issue. So I think it really is about accountability and working with companies to make sure that they're instituting policy practices on these issues that incorporate long-term value. And I just want to mention the one other question on the SEC. I think that question came from Ann Simpson Calpers, who's been very instrumental at the SEC on working on these human capital management disclosure issues. Now is the time for the SEC to step up and really bring investors, issuers, market participants to the table, and whether that's through requests for information, roundtables, setting up another advisory committee specific on ESG disclosure. That's the opportunity we have now with this the new SEC, is to really build momentum around this, bring everyone to the table, bring all the ideas, bring the market participants, and let's find a way to move forward. So I think that's the opportunity we have now.
And you mentioned when we spoke earlier, when you look at the stakeholders that are really generating momentum, you have one group, which are employees of companies. Can you talk a little bit about your views, how you see employees of companies actually being active in driving a certain agenda in regards to inequality or inclusion?
Yeah, just I would give a major example that we're seeing. You've seen social media companies, Twitter, Facebook, and their employees really driving certain change that they want to see at their company. And as we get back to that S issue, being able to attract, retain, and promote high quality talent is a material issue for every single company. Being able to retain the best talent will lead to better financial performance in long term. More retention of your employees will lead to less costs associated with hiring new employees. And so these are important issues. And if companies aren't working on these sustainability ESG issues, are being pushed by some of their employees, you're going to lose that talent. And a lot of employees are driving that change. And I think it's important for investors to realize that, understand it, and how we can and take the conversation investors may have with employees and use it to try to push the executives on some of these companies to improve corporate sustainability.
I just want to chime in here and acknowledge our president, Kerry Kennedy, who is also on the line. Kerry asked a question, and Kerry, I'm putting you on the spot. If you can hear me and are able to turn your camera on, I would love for you to ask your question to the panelists as well. Kerry? She's on mute. Okay, you're on mute, Kerry.
Okay, am I here? Can you see me?
Yes, yes.
Oh, that's really bad
People are
news.
saying you're shy, so you don't want to show your face.
Anyway, first of all, thank you guys, everybody, so much for joining today. So I have a quick question, which is, we work with the Coalition of Immokalee Workers, which is a group of farm workers in Florida that has successfully prosecuted over a dozen cases of slavery in the United States. They have secured agreements with 90% of the tomato buyers in Florida to comply with their Fair Food Program, which protects workers' rights. When they won the MacArthur Genius Award for their work. They were the Obama administration, the State Department, they've won every award you can imagine, including the RFK Human Rights Award. They have gotten these agreements with McDonald's, Burger King, Walmart, Whole Foods, basically everybody you've ever heard of. The one holdout is Wendy's. And Wendy's has refused to join. The New York State Common Fund has been helpful in reaching out to Wendy's to talk to them about this, but there's been no movement. Nelson Health controls Wendy's. He owns Tryon Fund Management. And so I'm wondering what you suggest. And I also want to point out that Wendy's has moved some of their tomato picking to Mexico, where there's known to be, abuses. So is there something we can do using the Leahy law, or what else could we do?
I'll jump in there and thank you, Kerry, for mentioning our work. And I know that
Kyle.
I know the controller cares very much about this issue and has been very hopeful in working with you and working with the mobile workers on this issue. There's more. I think the more that investor community come together and really, push Wendy's further on this issue is what really will move. We've seen in the past move companies is investor coalitions, larger groups together. Really can move companies in a certain direction. And I think, the great work that you're doing in advocating for these workers, I think we, maybe larger investors coming together could further push this issue.
Thanks, Kyle.
Yeah, I would give one other suggestion because with the increase in indexing, what you see is on a lot of publicly traded corporations that index fund managers now own 20 to 35% of those specific companies. So I haven't looked, but it wouldn't shock me if Wendy's is, again, a third owned by indexers. And the primary ones are, usually Vanguard, State Street, BlackRock. And so, going to those firms and sort of explaining what's going on and making it, a proxy issue, I think would probably be a good way to go at it as well.
Okay, that's really helpful.
That's great. That's great. Yeah. And Anne mentioned in the chat, Kerry, that we should totally try to get Nelson's help on a call. Maybe it's so we can talk offline about what we could do there. I think that we'll leverage our friends at New York State Common Retirement Fund and STORE to the degree that you have connections with some of these big index funds. Would love to capitalize on that, because this is sort of the last holdout that the organization, but specifically Kerry, who has been sort of the leader of this push, we really would love to see that closed out in 2021.
And how about Shani? What do you think?
Yeah, so I think all the speakers, in terms of their perspective of suggesting kind of putting positive pressure, positive moral pressure, is all very good. I just want to say on Liberty Shares org, we believe in the carrot, but we also believe in the stick, because even when you have holdout companies like that, is because they know at the end of the day, they're looking at their bottom line. They don't want to pay that extra 5 cents for that tomato until you make it not worthwhile. And that's about just bringing liability to them. So I don't know specifics about Wendy's, but there are times when we think we have to apply pressure somewhere. So this is why we go to regulators. This is why we try to act. I can't say anything more about the fact that we have something in the works with the DOJ, to bring the first ever criminal prosecution on forced labor on a corporate level in this country. Like, we're actively working on these things, because when people start hearing large fines, custodial sentences, then they realize paying that extra 5 cents for that tomato is probably just worth it to not have that as a possible liability. Absolutely, the pressure from investment groups, from index funds, all that needs to be continued. It's carrot and stick, and you have to have both, because you're always going to have people who don't respond to carrots.
Thank you.
Yeah.
So one thing, we can follow up on this, Janine, but it would be great to figure out how we can ding their standing, as you were able to do with that other company. So let's try and follow up with that. If there's anybody else who's on this call who's interested in this, please get in touch with us. You can get in touch with Sansia and we'll follow up with you, because we need to stop this injustice in our own country. Thank you.
Thank you, Kerry. So Ingo, I'm going to turn it over to you for final words, and then I'll just quickly close out with a couple of updates for the attendees.
Yeah, thank you so much, and thank you for all the comments today and for attending. One comment I want to make on the, on Shini, on your carrot and stick argument. So when you look at the stick and you look at regulations, specifically as it relates to the global marketplace, we have here in the US with the Global Magnitsky Act, I think the first time since this sanctions law has been put in place years ago, that looks at human rights violations abroad. So originally it was done to really punish the perpetrators who killed the lawyer Sergei Magnitsky, who worked for Bill Browder, an American investor in Russia 15, 20 years ago. And now that law has been expanded and is now labeled the Global Magnitsky Act, that looks at human rights violations on a global basis. So I think from an enforcement action, we have, I think, a framework in place that is really driving the agenda of providing more transparency and actually having a punishment tool that allows, I think Western world, Europeans are also signed up and are on board with Global Magnitsky regulation, to really have a tool to do something around human rights violation when they occur and when they can be, let's say, proven. And I think that is an important, improvement in the entire debate to provide transparency, to actually do something about certain human rights violations that we are seeing on a global basis. So I think we are making really progress in that. And from that, what I heard today about dynamics by looking at external data, Shini, what you showed on the news stories and with your case management tool, we have in the big data world capabilities to really do bottom-up analysis, to really collect information, verify it, distribute it, and analyze it. And when that information goes in the hands of investors, there are certain elements that will be included in any kind of ESG data framework that we as Refinitiv or that other organizations are collecting. So I think these are all encouraging signs that we all benefit on. So I want to thank you all for really participating in this conversation today. It has been an honor for me to work with Robert Kennedy, Human Rights, to really address these issues. Sansia, we are working together in this initiative, Strengthening the S in ESG, which will continue to have conversations. And I understand there is a meeting in March where we will be talking about the results and the white paper that we are about to publish. I have to talk to our CEO, how he is on board. I think he is aware of the initiative, and I hope we can even present the results at the next WAF meeting to really put some more insight and really momentum behind a emerging category, the S category in the ESG framework. So thank you all for being for participating in this.
We thank you. We thank you, Ingo. Thanks, Kyle. Thanks, Janice. Thanks, Stuart. We really appreciate you bringing a lot of your knowledge and expertise to this discussion. It's the first of many that we're going to be having this year, and certainly encourage your attendees to pay attention to updates from RFK Human Rights, particularly around our March Summit, March 16, 17, 18. Just around the corner. We will be digging into this topic again then, but for now, Thanks, everyone. And feel free to reach out to us at RFK Human Rights. Our email address is compass@rfkhumanrights.org. And we'll be happy to engage with you. So until next time, take good care and stay safe.
Thank you so much.
Thank you, everyone.
Thank you, everybody. Bye-bye.
Yeah, thank you.
Bye.